All right, all right, all right. Can you guys hear me now? Let me know if you guys can hear me, and I'll run through all that again, right? At least you can see my face, pretty face, right? Coming at you live here. Um, yeah, so let me know that you can hear me, guys, and then I will get on with this since we had that little bit of a hiccup there. Yes, yes, yes. Okay, you can hear me. All right, again, welcome everybody. Chris Franks with Texas West Capital, coming at you live just a few minutes after 11 a.m. Central Standard Time from just north of Houston, Texas, on Lake Conroe. Good to have you guys joining in. So last week, so we got tax day today, right? And so I don't know about you, but I got my extension in, so I don't have to worry about taxes, finishing, get them sent in until October 15th. So that's nice, right? Yes, I was just about to say, Hank, I've got a new webcam here. My old one went out last week. Those of you in Discord know that. And so I actually went out and got a DSLR. So we're going to try this, see how this works. It's actually a full-fledged, nice camera. And we're going to try again to see how this works. So if I have any issues, you guys, hopefully you're understanding. Um, but anyway, hopefully give you guys a better quality thing here as well. I've got to figure out how to get it better set up, but I'm working on that. It's a little bit more. So I've got this huge ultra wide screen. This is what I use, is 49-inch ultra wide curved monitor. And the only problem with that is it makes it a little bit more difficult when you're trying to do something like this where you're streaming. It's hard to find where you can put that camera where it works really well. So yeah, we're working on that. But anyway, so good to see you guys here. Who's here already? We've got, let me see here. We got Beak Vape. What's up? LXT is here. Bamboo. Good to see you guys. Data, Hank, Fibbo's here. Let me see who else is here. Anybody else? Andrew, what's up, man? Arrow Quinn, good to see you. Says, is that a 4K camera? Hank should finally be happy. yeah. Like I said, it is a 4K DSLR, really nice camera. So actually moved up from the webcam to the actual camera. So we'll see how this goes. Trying to make your lives better, right? I don't know if seeing me in 4K is going to make your life any better, but hey, maybe it'll make you listen a little more, right? Let me see here. You guys like this? Great. Deadly123, what's up, man? He says, have a great day, everyone. Hope, what'd you say here? Hope, excuse me, hope all are really capitalizing on these moves. It's been fantastic, hasn't it? It's really been great. So we're going to see how many charts we can kind of get in today. Talk about them a bit more here. Deadly says he filed his taxes, took care of business. Fibbo says tax day just took all of my money away. Isn't that right? Man, it's crazy. It's crazy, man. And, of course, the more you make, the more you have to pay. Not just the more in general, but the larger percentage you have to pay. And somehow that's more fair. I don't know. It's a bunch of nonsense if you ask me. LXT, hey, curved screens, man. I'll tell you what, I love this one, man. I've had it for a few years now. It works extremely well. Scott, Jonas, what's going on, guys? Fadi, good to see you. So let's see here. I'm still casting at 1080p, which is more than fine, by the way. Yeah, well, that's all I can do is 1080p. It doesn't allow it to go any more than that. Just the high def. It doesn't let you go to 4K for your streaming. So it is what it is, right? Deal with it, Hank. Anyway, yeah. So tax day today, guys. So again, if you're in the U.S., today is the day taxes are due. Normally it's the 15th. 15th fell on a weekend, so then it becomes the next business day. But it is Emancipation Day in D.C. on Monday, and so that's why then it got extended to today. So today is the last day for you to get your taxes done. If you can't get them done, get an estimation out there and file for an extension. It's guaranteed. I mean, I don't know that I've ever heard that it hasn't ever been given out. But it's an automatic, extension that you can, but you have to claim it. You have to request it, guys. And that'll get you until October 15th to send your taxes in. But, you still have to pay any taxes that are due. And if you don't, you still have to pay, the small penalty fee and the monthly interest on it. But it's a lot better paying it with an extension, because if you don't file your taxes, you don't file the extension on time, it's a lot more expensive. That late fee is really expensive. And then I think it's like instead of a 0.5% a month, up to 25% of what you owe, it's 5% a month or something like that. So it's just expensive, guys. Who is a U.S. citizen in any way, and why? Because we were born here, man. That's why. Let me see here. So anyway, so there we go, guys. What else we got going on, man? Let me see here. Where are my articles here? Man, BlackRock's assets seen topping 15 trillion in 5 years' time, guy. That's not going to happen in a depression. So, there's a lot of stuff going on now. I posted something here on Twitter. Let me see here. Let me see if I can pull it up here for you guys. Let me get in here. Let me grab that screen real quick for you. Oh, where are we at? Twitter. I think that's the one right there. There we go. All right. So let me pop this up here for you guys. There we go. And so I posted. Where did I post it here? Oh, here we go. So we've got earnings season off to a best start in a decade, Bank of America says. So basically what they're saying there is that, everybody's been like all doom and gloom about earnings season coming up. I think most people have used that idea as just, okay, well, here's what's going on with the economy. So we think it's going to do this because it fits our narrative kind of thing. And so they were expecting earnings to be really crap, right? And it's not. Earnings, like I said, the best in 10 years, right? And so, bears will be bears. And, they're arguing that, well, they're going to get worse. And, they might. But the reality is, so far, we've got 10% coming in already, and they're way up there. Like, it's just stupid how good they look comparatively, especially for what was expected. So, man, oh man, right? So we've kind of got that going on. What else do we have? We have, I didn't post it here. I thought I had posted another article here. Let me see if I can find it real quick. The stock market, that's what I'm looking for. Stock market just saw the biggest rally into earnings season since 2009. So let's kind of pull that up here, guys, real quick. And so since 2009, guys, what happened in 2009? You guys remember? It was the end of the great financial crisis, right? So the stock market, I believe, bottomed out around March or so of 2009. So, again, earnings season coming in there, and this is the best stock market rally into it since that time. So let me kind of pull that up here real quick. I'm talking to you and I can't think at the same time. Not that I can really think all that well anyway, but, it is what it is, right? All right, let's kind of pull this up here for you. There we go. So up, again, the best one here since 2009. So again, if you're looking at macro and you're trying to decide what's going on with the market, with the world, with everything, whatever, remember two things. First of all, one is the market is not the economy. Okay. That's the first thing you have to realize. You have to divorce the two. They're two completely separate things. Now, sometimes they run tandem, right? But other times the market can be different than what the economy is. So people will come in and go, okay, well, the economy looks like crud, so the stock market needs to drop. And then the stock market doesn't drop, right? So that's kind of what we've been seeing. Everybody's expecting this bigger down, because of all this kind of stuff that comes in. It says, well, with the yield curve inverting like this, it usually, and by the way, it's not always, okay? The yield curve inversion thing is a lot of times it comes before a recession, but not all the time. If you look historically, not all the time, okay? So, you see all that information coming in, and then you get something like this, again, like what we just talked about, where we said, hey, 2000 and, the best rally into, since 2009 into earnings season, right? And again, that came at the bottom of that great financial crisis, right? And so we'll look at we'll look at the stock indexes here again. But remember, we've been rallying up since November of last year or whatever. Or I guess it was it prior to that? No, it wasn't prior to that. Yeah. So about November or so, October, depending which index and whatever you're looking at. So, again, same idea, right? Except that 2009, the bottom came again in, March or whatever, whereas we've been, rallying since November of last year. But nonetheless, you've got the rally coming up into it, right? So Fibbo says it there as well. He says, the stock market is not the economy. Fat cat pockets, he says. Sevilla, what's going on? It says Apple new savings account. Oh yeah, what was it? 4.15 or 4.25, I think, for the interest rate on that. I just saw that real quick. Brian Riley, what's up, man? Link finally had a nice pop. Yeah, Link has been going sideways for a while, guys. I think Link's probably something good for a longer term trade. Data says we as humans are not supposed to spend too much time thinking anyway. That's what they want you to do anyway, right? Hank says, but I was promised hyperinflation and collapse of the U.S. I know, right? Seems like everybody says that every, 10, 15 years or whatever. And here we are. We're still here, right? Again, people have been romanticizing the death of the dollar since Bretton Woods, right? So, you're talking what? 80, 90, 2010, 20, I mean, 50 years, 50 plus years, right? Excuse me. And here we are. It's still the global reserve currency. But, again, guys, if you haven't really been paying attention to this, it feels like the things everybody says, with everything that's going on, like it really has to happen, right? Like the dollar has to die and Bitcoin has to be this global reserve currency or whatever. But I can tell you guys, as somebody who's been through this and been paying attention to this every, 10, 15 years for decades now, really, it's the same arguments. It's just they're using something different, right? This time it's Bitcoin. But really the argument is the same. And does that mean the dollar can't die, whatever? No, it doesn't mean that. But again, the likelihood, the idea that the dollar's just going to, roll over overnight and all of a sudden we're all going to be destitute, right? I mean, it doesn't make any sense. It's going to take time if the dollar is if they're to use something else, right? But China and BRICS and blah, 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 not using the dollar. Yeah, guys, again, you're thinking too simply. 60+% of the world's debt is dollar denominated. It's got to be paid in dollars, right? 60+% of the world's debt. 5% is the Chinese yuan. That's it. How do you become a global reserve currency when you have less than, when the debt held by the world is 30 times greater? Well, no, I guess not 30 times greater. What is that? 12 times greater, right? By the next one up. So, again, yeah, everybody's going to go say, oh, they're going over and doing this. But I think reality is, they'll kind of come back. Everybody want to try and do something. But, as much as you want to try and do something, can you actually do it? And right now, to dethrone the US dollar as a global reserve currency is really a difficult thing because it's so entrenched in everything, guys. Remember, the idea, if you don't understand the idea of a global reserve currency, the idea is that it makes it easy for countries of all different kinds with all different currencies to transact, okay? So you don't have to go from one country's currency to another country's currency to another country's currency to another country's currency, depending on what you're buying or selling or whatever. You can just do it in the dollar, right? Everybody into the dollar, everybody out of the dollar. I mean, into their own currencies, and that's how it works. That's why the U.S. is there, right? And so on top of that, the U.S. has, the production coming out of the economy is, top of the world, right? We're leading in terms of oil production and exporting. I mean, there's all these things. We've got, the most advanced military in the world. And I know that that's not a bragging thing. What I'm trying to say is the U.S., can protect itself and others, with that military, right? As opposed to somebody like, say, I don't know, not to pick on anybody, but some other country which isn't as advanced. And you say, oh, but China and India have these larger numbers, right? Well, yeah, sure they do, but at the end of the day, the technology is still right now, up there. And so it's not just this one thing; it's all these different things that kind of lead to the US dollar being that global reserve currency. Now, again, I'm not saying that's not going to change, and I do expect it to change at some point. I do. History shows that fiat currencies generally last a few hundred years at most, and then they roll over and something new is created, right? And so the dollar's been around for a bit, and so we're probably coming up to that point, but not tomorrow, not next year, probably not even in the next decade, I don't believe. So, now that doesn't mean that Bitcoin can't go up and do great things, right? I think too many people kind of get sucked in with that, right? This is the Bitcoin and crypto is their first foray into the financial markets and global macro understanding and all this kind of stuff. And so all these things, again, repeat that have always, been repeated every, again, 10, 15 years. And so it feels like it's really legit, like it's really something that's going to happen, and then it doesn't. And this is just part of it, guys. Again, none of this is out here to say anything about anybody other than you're just doing the same thing everybody else has done every 10 to 15 years. So, again, you don't have to believe me. And, a lot of people probably won't, right? But it is what it is, right? So, Andrew here says great reset in 2030. Again, and I was one of those guys who was thinking maybe we were going to get this depression coming up, recently, right? And then as we were pulling back, remember, I kept talking to you guys about the fact that we haven't had that blow off top that we would be looking for at this part of the cycle. And so that led me to believe that, okay, we could continue up higher here. And, there's no guarantees, but things are looking like it wants to continue up. Now, whether that means a quick blow off top here this year or some extended multi-year rally, I can't tell you which one for sure, but I'm not leading to a blow off top this year. Honestly, I'm leaning toward more of a multi-year kind of rally. And that continues, that view continues to increase the more information that comes in. So, I guess if you are not very astute, or you're not very well read into global macroeconomics and global financial stuff, I would be really careful with just assuming because somebody else maybe, or somebody, even me, right? Or somebody else seems like they are and they say something, you can look at that, but be careful that you don't just grab onto it because, oh my God, it sounds good right now. Because a lot of things that sound good don't actually turn out, right? So you just want to kind of be careful out there. Let me see here. What else we got going on here, guys? Excelsior, what's up, man? Good to see you. Corey, let's see here. When we check the link chart, does that extremely long accumulation phase usually result in 4.23 since it was such a long range, meaning more explosive? What do you mean by 4.23? But yeah, the in general, for your question, the longer price consolidates, the longer it goes sideways in a range, the stronger and further it should break out or break down. Yeah. I'm not sure what you meant about 4.23, but yeah, the longer you're in that range, the more you should expect it to come out of that range higher and faster and harder and whatnot. But yeah, so again, we're sitting here in this, running into this earnings season, and we'll see how it plays out. Again, I can't guarantee you that A, B, C, or D is going to happen. But here's the thing, guys. Being a trader means you're a speculator. Speculation defined means there are no guarantees, right? It means you are taking on risk. And, there's that great saying, scared money makes no money, right? And what that means is at some point, you have to actually get into the market. And for a lot of traders, that can be fearful when you have all this other information going on. But I really believe that fear comes from two things, okay? The first is a lack of understanding of proper risk management. I think that is absolutely the number one thing you have to have if you're a trader or investor. You have to understand that proper risk management and use that, because once you do that, then you know that even if you're wrong, the loss is going to be so small realistically that it's not going to be a big deal. The second thing is people don't understand markets. Okay. Um, and that's a big part of it. So you get a fear of the unknown, right? FOMO, fear of missing out. Well, missing out on what? You don't know. You're just scared you're going to miss out on it, right? And so those kind of things, those two things really lead you to get into analysis paralysis and whatnot. But at the end of the day, guys, you have to take a direction and you have to actually get in the market. But you can't just jump in all willy nilly, right? You can't just go in there and go, oh my gosh, I'm just going to YOLO because, hey, you only live once, right? You're wrong. You only die once. You live every day. Okay. So stop saying YOLO. It's a silly thing to say. Anyway, so we kind of got all that going on there. So man, just kind of a lot of craziness, right? Let me see here. Let me kind of catch up with you. Bamboo says crowds tend to herd and be wrong at the extremes. Yes, somebody's been listening to me. Yeah, so at the end of the day, guys, everybody herds, okay? And so even your great financial, people out there and whatnot, and funds and whatever, they tend to herd as well. And you'll see that most everybody will herd in the same direction at the extremes of movement. So when you're getting toward the end of a more major, say a wave, if you're thinking in terms of Elliott wave, right? A rally or whatever, everybody is going to herd into the other way, and it doesn't mean it's right. It just means that you kind of get to that psychological level, that emotional level where everybody kind of starts feeling the same way. Pay attention to that though. And beware, you're everybody too. You're going to herd too. I've done this for, again, quite a long time here. And I still have to be careful that I'm not hurting, with things that I say. And I can't guarantee that I won't, right? I mean, I think that the difference here, if you're a trader, is understanding this and then working against that versus actually, not even realizing that this is happening. And that's really, I think that's really, the edge when you're doing that. The edge is understanding that your emotions are going to be there, that you're going to tend to herd, and then recognizing if and when you start to do that, and then doing something about it. See, it's multiple steps here. So yeah, if you're looking for edge, there's some edge for you guys, okay? Fiboswani says he's got Bitcoin replacing USD for him as an individual, but as a world currency, that will take time for sure. Yeah. Let me see here. Oh, the 423 fib retracement. You mean fib extension? Fib extension, I think is what you're talking about, right? Because you're talking about extending further, not retracing into what's already gone, right? But let me kind of catch up with you guys here. Andrew Bennett says, REM, everybody herds. He says, live every day. Love it. And that's true, guys. Again, really, people tend to say that, that you only live once. No, you're living every day. You only die once, right? Or I guess, I can't even say that, right? Because some people die and are brought back, medically. So there is that. So, but let's not get there. Let's just talk about in general, right? What's going on, Mark? Good to see you, man. You think the camera looks unreal in that spot? Okay, good. Okay, guys. So let's kind of jump on here. Let me pull up a chart here and let's start looking at some charts with you guys. What do you think? Should we do that? Let's see here. Where are my charts? Nope, that's Twitter. That ain't gonna work. Here we go. Let's kind of pull this up here for y'all. And let's start off here with the Bitcoin, the BLX chart here. Okay, so Bitcoin liquid, Brave New Coin liquid index over here, right? That's what this is. So I've shown you this chart a few times before. We'll continue to look at it, but I mean, the most simplistic way, I think, I've tried to find the most simplistic way you can actually look at the Bitcoin chart, right, from the all-time high, and I think this does it right here. So you have the long-term resistance, a year of resistance here that we broke out through, and we came back and we retested as support. Great pin bar on support. And I told y'all when that happened, and then we got this huge bullish engulfing candle. I mean, that's absolutely massive there for a weekly, right? And we broke out then above this resistance right here. This resistance we have from back here in September of last year, rallying up through October of last year, and then kind of coming up again as we broke out. We hit that, retested support, hit the resistance, retested support, and then boom, busted out, right? And then look what we've done since then. We've retested that resistance as support. So, I mean, I think honestly, this is probably the most simplistic way to actually look at what's going on here. And so, what would I say? I would say, well, generally, if you're looking here and we're above this line, we good, right? I mean, it doesn't mean we're bad if we drop below it, but I mean, if we're above it, we good, right? Who all does not agree with that? Let me see here. Can I see the charts? Can I see the charts fully now? Yeah, I've got the camera up there instead of in front of me here. Yeah, so I can see it. I can see the charts better now. Because again, that camera, the DSLR, is a pretty big size sitting right in front of the chart there, right? So anyway, I mean, yeah, so that looks good there. Again, the other chart over here shows this big pitchfork here coming off this October 2011 low up to the July 3rd, I'm sorry, not July, but October of 13 high, and then the subsequent there, January 15 low, right? And so as you can see, we've held really well. And by the way, this is, if you didn't notice here, this is the 3-month chart. So this is the quarterly chart. And so, I mean, yeah, when we're looking at this, we just kind of peaked out above and we hit this outer extension here and then came back down, and kind of rallied around the middle here, hit the top, came back, almost hit the bottom. And here we are back up, looking up. So generally would kind of expect this movement up into the pitchfork EQ here, which is right around the EQ of this quarterly candle. So that gets us right about 56,000 or so, 57,000. And so that would be in line with this idea that I've been talking about, which is maybe Bitcoin's going to be really expensive. We're going to get this strong move up. Maybe something similar to what we saw back over here in 2016, where it just kind of kept going up, right? Now, this was interesting because every quarter we went up, then we were kind of sideways, then we went up, and then we were sideways, then we went up. We were sideways, then we went up. So, again, could potentially see something like that once we get through here. But we'll see. Again, there's a lot of different ways we can look at this, a lot of different things that we can do, but it doesn't guarantee. There's nothing here saying all this stuff is guaranteed. What I do like when we look at this chart, though, on this quarterly here, I like that we have this rejection up here, right, with this pin bar, right into a rejection down here with the pin bar, and then the drop, and then again we get this, this doji here. And then we get this sideways, right? And so this is that range at the bottom. This is that, little wick at top, little wick at the bottom. And we're just kind of sideways with that. And then we get this bullish engulfing coming up, which takes us above that monthly EQ or that monthly pivot right there. And so here we are, right? I don't hate it at all. I like the structure. I think it looks pretty all right. You can see that we've crossed bullishly here on the Stochk RSI. And so you can notice that every time we do that previously, right, it's meant the bottom was in, right? So if we go back here to July of 2015, where we crossed bullishly here, right, and coming out of that, it marked that the bottom was in. If we look here in 2018 here, and we get to the bottom, and we got the cross on this candle over here, right, this April 19 candle. But of course, it's late, it's later off there, but nonetheless, we're looking at the longer time frame. We're saying, well, when this happens, it usually indicates that the bottom's in, right? Again, we had the low here, and then it crossed up back over here, marked it was bottom, and here we are again working on this, and so we've got this, right, because we've already crossed right here, right? We've already crossed. But I mean, you can watch the next 3 months just to be sure, right? So April, May, June, right? But at the end of June, look and see if this is still crossed. If this is still crossed, I mean, at that point, from a long-term, maybe an investor or long-term positional trade, I mean, the bottom's in. At least historically, it's always been, right? Now, again, that never means that it has to continue doing the same thing, right? Past performance doesn't, mean that it has to have that same thing happen in the future. But as traders, we tend to work with probabilities, or you should be anyway. And so the probability is every time before when that's happened, the bottom's been in. So you should expect that the bottom is in until it proves otherwise. That makes sense, guys? You know, that quote I posted up there, Sir John Templeton said, the most dangerous 4 words in finance or investing, it's different this time, right? It's rarely ever different this time, okay? Anytime. Bamboo says, so we're going to 250K. Heard it here first from you. Maybe, but I'm not sitting there going to give those huge targets. Those are ridiculous. That's all clickbait, right, Hank? Hank says, always a flat or bearish quarter after the great white candle. And again, you know, we are seeing that here as well. You know, as we come into it, but again, it doesn't mean it has to be, right? Over here in 2012 coming up, we could see something like this. Honestly, you know, this is possible as well. And this big candle, bigger candle, and then some sideways. But the thing here really is you're looking at getting to the resistance, right? In this case, you're kind of back and forth as you get up here into that. In this one, again, big candle up into this resistance, pull back. So, you know, if we look at that, then I could see, again, an argument for why we would see this rally up here, you know, to 46 or, you know, 56,000, getting us up into this resistance area and then pulling back, right? I could see that. But, you know, my feelings honestly would not be hurt if we did just kind of sideways here, like we did in 2016 coming up. I mean, it gives you a lot of opportunity. Now, if you are a newer trader and you have a lot of trouble, you know, discerning when to get in, and you're not really paying attention to risk management, and you know, you don't really understand what's going on with charts and stuff like that, then sideways can be tough, right? But here's the thing. Even when we do these big pullbacks, people still get too scared. And they won't buy anyway, right? So, I mean, really, you're damned if you do, you're damned if you don't. I'm going to tell you guys right now, if you don't know what proper risk management is, honestly, get out there and learn it, because it's going to do wonders for your confidence and your ability to jump into a trade. If you don't have that proper risk management in your mind, the trade is always YOLO, and we're just going to go in and hope in God and pray, you know, cross my fingers and pray to whatever God you follow that it continues, right? And that's not a way to trade, guys. You're not going to get rich like you want to get rich doing that, okay? I'm just being 100% clear, transparent, honest with you here about that. You're the golden goose, the special sauce. The thing that you are looking for as a trader is not the system, it is the risk management. Because pretty much all these other systems work, guys, if you spend the time to learn them properly and practice them properly. And again, that takes focus, discipline, effort, consistency. You know, it takes all that. It takes getting out of your comfort zone and doing things that you're not comfortable with. But Chris, my comfort zone, I'm not in a comfort zone. I hate my life. I hate what's going on. Yeah. But are you doing anything different? No. Because that is your comfort zone. It doesn't mean you like being in there. It just means that you're scared to do something different that takes effort, that takes a requirement. Again, that focus, that discipline, that consistency that's required to get out of that, to get from point A to point B. Okay? Being in your comfort zone doesn't mean you're happy or you like to be there. It just means that you are not taking the opportunities and taking the steps needed to get away from what you do consistently. Comfort is just that thing that you do daily in and out, right? That thing, or whatever time frame, but that you consistently do. Whether you like it or not, you consistently do it. It's comfortable because you understand it, because you know it, because you're used to it, not because you like it. Okay? I hope that clears it up some. I've had some comments before on some posts that I put like that. But that's the meaning. That's what it is. And guys, I'll tell you what right now, if you're not liking this right now, if you are not hitting the like button or subscribing or commenting, this great stuff there, then you're not paying attention. Put a little effort out there. I love you for it. Let me see here. Fibaswani says, sell in May and go away. Does this work here? So right now, the way I'm approaching this is the likelihood that we rally up into April and into May, and then the summer we get a pullback, and then we rally further for the Q4 of this year, and then that gets us maybe our high for the year, and then we pull back the first quarter of next year as we pull back into the halvening, right? Now, with all that in mind, it could be a little bit off. It doesn't mean we have to be down the entire summer. We could maybe in August start rallying, and then we could peak out in October or something. But remember, generally the way Bitcoin works is it has this November, December cycle, right? And so I think if we're going to hit a high, prior to halving, it's most likely going to be around that time. Now, again, we did it we did it actually here in June. This was the June high here of 2019, and we actually hit that high before the pullback and out of it. I don't remember where the halvening was in here. I think it might have been close to this July 16th area. But again, we rallied into a high here in April. So but then we pulled back and went up. But this was, again, that April prior to that halvening, right? This was June prior, to the halvening coming out. So, but how the price follows, guys, remember, is going to have a lot to do with structure as well. So prior to this, we've never really had this this move up, this pullback, this slightly higher high, and then a pullback, right? We've always had the high and that's it. We had the high and that's it. We had the high and that's it, right? So again, looking at this and comparing it to what we've had here previously, which have really been kind of three different times, right? Might end up being more of a incorrect, assertion as you try and follow that. I mean, in general, you can see we had this nice strong move up, and then we had kind of like a staggered move up, and then we had this big pullback and then move up. So as it's matured, again, as more people become involved, there becomes, the pullbacks become more, right? You don't have these big, strong rallies like you do prior, right? At the beginning, where there's few people, few liquidity. As more liquidity comes in, then you start having more pullbacks, and then you have an overall bigger pullback. And so here, especially if we're working our way up to some kind of blow off, I don't even know, over, maybe 2030 or something like that, right? Maybe we see something like this, and then like this, and then like this, kind of leading into it as we do it, right? One more time. And so this maybe becomes the cycle, right? If we're going to be if we're going to be an extended period of time like that through another 2 or 3 cycles. But again, we don't know for sure that's going to happen. I'm just, until something else comes in otherwise, information shows differently. That's kind of what I'm looking at, is that longer play out. But of course, I'll probably be here talking to you guys, so you'll know when that changes for me. Christopher H, man, yeah, good point, right? How can we trade if all the U.S. exchanges are closing? Mass exodus. Everybody, leave the U.S. Give up your U.S. citizenship. Go somewhere else where they don't charge you all these taxes on crypto, right? Again, doing my taxes. Geez, so whiz. That sucked. But let me see here. Mark saying, what? That shows how sports work? Right? Getting close to the soccer net and just move it. Yeah, right. Yeah, Aeroquin. Whoops, I hit the wrong one that you guys were talking there. Let me get Aeroquin's comment up here. He says, I saw that Coinbase is considering leaving the U.S. Yeah, I don't know how much of that is actual talk or how much of that is actually really going to happen. But yeah, I mean, something I talked about, during the last bear market, well, the one previous, right, back in 2018, was how going forward, what we're looking for is regulatory clarity, because it doesn't matter what regulation is saying. It just matters that it's clear, right? Money wants to come into crypto, contrary to what people are going to tell you, after the whole FTX debacle and all that nonsense and 3 hours cap and all that. There's a lot of money that still wants to find a reason to come in here, but and especially now they're going to need that regulatory clarity. So, again, I could see Coinbase leaving because, hey, it's just not clear, and you're not helping us understand it. I think I saw something about Gensler's up in front of Congress, and they kept asking him, they kept pushing him, is Ethereum a security? Is Ethereum a security? And he wouldn't give a clear answer. And so now apparently there's a senator or something out there, there's somebody out there in Congress who's trying to pass something to have Gensler removed, which is, I love to see that, because again, I think Gensler's just a big old hammer, a big old hairy hammer. And I don't think that he really even, he just wants to say, listen, I think it's this. And so now I'm going to go after everything rather than trying to figure it out. And again, courts aren't well equipped to figure this out. That's what he's supposed to be doing. That's what his agency is. That's what they're tasked to do. Um, you know, the courts don't have that background to really kind of look at it. Yeah, you can bring them information and you can look at previous case law and whatever, but maybe this, crypto is this thing that's just different enough. It's just new and novel enough that maybe it doesn't follow along as other securities do, right? And unfortunately, you're putting it up to somebody, the court, right, who doesn't have the background to kind of settle whether this may be or not. Now they're going to say something one way or the other. But again, the whole reason for the SEC being is so that they can handle this kind of stuff. So they can say, listen, this is what we think it is. Not so they can go to the courts and go, oh, it's up for you to decide. That's not why the SEC was created. That's not why any agency is created. They're created to be the experts, to take care of it, because Congress knows that Congress is not the expert at it and doesn't have the time to become the expert at it or to go at it all the time. Same thing with the courts. And so anybody here that's been through law school, you'll know what I'm talking about. This is a huge thing. At least it was pushed when I was in law school, was this idea that you don't want these kind of things going to court, because either side, you don't want it going to court, because the court is just this layperson who doesn't really know. And if they don't really know, then it's a toss-up whether you win or not. And so, again, if you're going to court, you should be going to court with the idea that you're likely going to win, not just because there's a chance, right? It's just big general talk. Somebody that's been through law school, that's the way, that most lawyers are going to approach it. Unless you have deep pockets, in which case they might be willing just to do it anyway because they're going to get paid, right? But we'll see how this all comes out. But I did see that about Coinbase, and I know everybody, right? We saw Bittrex. That was the other thing, right? Bittrex is being charged by the SEC now, with all this same stuff, right? Honestly, I just don't know where the SEC's got enough employees. Honestly, I think I would love to talk to some SEC lawyers, because I think they're probably in there going, "Oh my God, stop already! We've got all this workload. How the hell do you expect us to get through this too?" And a lot of y'all probably know that with your own work, right? When you're at work and your boss keeps piling work up on you constantly, more and more and more, and you don't have the manpower to really do it effectively or quickly or whatever, but they're still on you about getting it done. Oh, it's crazy times, right? Fibbo, I'm going to put you on record here. You said agencies are created to launder money. Nah, you said just kidding there. I know, man. I know. Just giving you a hard time. Kimosabi says they're looking for some kind of high at the end of April, beginning of May. Then if it keeps pushing, then keep buying. Summers are usually boring, but ready for them not to be. Yeah, again, guys, seasonality usually plays a big part in markets. But at the end of the day, again, this structure at the top here is different than every other top structure, which are somewhat similar, right? Or at least they show a bit of an evolution over time, right? Completely different here comparatively. So what's going on here could be completely different than what we've seen with this evolution of each cycle here as well. So at the end of the day, guys, the hardest thing for new traders is to get out of their own way, right? Don't keep shorting if you got this strong movement, right? You don't have to be in, but don't keep shorting, because you're going to get run over again and again and again, right? So if we look at, say, local count here, right? So I had a few different ideas I was looking at here with Discord, and I told them, if we broke down there, that we'd be looking at this orange range right here as our target, right? And so we got this great pin bar candle right here at the low, right? This is the 1 hour chart here. Great pin bar candle at support. No reason you shouldn't have been long in that. I also had put on this pitchfork here, and you can see how price was basically respecting the mid range here of it. And then look at how beautiful this is. This big run up here, right? Hits the outer one, pulls back, breaks out all the way through, hits the outer one here, pulls back to it, hits it, pulls back to it. Now we're breaking down toward the lower one here, which is just nothing more than this resistance support here, right? You can just grab this, guys. You can just see this. I'm a big proponent of looking left. If you are trading and you're not looking left, you're not doing it right, okay? Look at this whole range here. Look at how everything's basically respected this kind of area right here. And so we come back here and pull back. So we're going to see if we can get a rally up off this and break out higher, right? Everything else aside, we've broken out impulsively here above the hourly pivot, right? We basically, again, I have the hiccups here, I'm sorry. Again, we basically hit this area of resistance. Look left, right? We hit that resistance. That's what we're hitting it diagonally, we're hitting it horizontally. And so, that's kind of where we're at here. And so, me personally, the pivots here, we've got this nice impulsive breakout above and pull back. I mean, as long as this pivot's holding its support, we should be looking up. Everything else aside, I don't care if you don't know how to trade pivots, or if you don't know how to trade, Elliott wave or anything else. With pivots here, we've broken out impulsively above here. As long as we remain above this, you should necessarily be looking up here, at least at the R1 pivot. Now, target-wise, this count I'm kind of going with at the moment. I'm looking at a few different counts, but this is the one I've got primarily right now. This has a target up here at around 32,260. And the great thing about that target is this wave 3, and that wave 4 will pull back right to this higher volume node here, right into this whole kind of this green area right here. So you get a 3, you get a 4, and then you get a 5 up out of there. But again, there's the bigger count here, which is the idea that we've got this as a large 1 and large 2 down here. So this is just a smaller interior count, and this wave circle 3, parentheses 3 target is actually up here at around 41,860 and 50 cents. So again, that if that's complete there, if this count is correct, then this gives more support for the idea that we rally up into 50,000, 55,000, whatever, get up there, and that gives us a first subwave of this whole wave on the breakout, right? You get the first subwave up near the top where we have all the resistance going across, right? Because that would give us this wave 5. Let me get the other chart here. That would give us this wave 5 up here, right? And so, what do you have here? You have this, right? Right here. So you would get 5 waves up into this. So you go 1, 2 into halving, and then 3 on the breakout through the all-time high. And so, again, that makes sense. Wave 3s are usually your biggest, strongest wave. It's where everybody goes, oh my God, I'm going the wrong way. I need to get in on it. And it usually happens through resistance, right? So if we look here, we've got a 1, we've got a 2, and look at this wave 3. Large wave, large spike of volume taking us up through here, up through the resistance, right? And then 4, and then 5. So it's the same idea here. You get this idea of a 1, a 2, and then a 3 on the breakout potentially. So until price kind of really makes a decent enough move backward that it invalidates the likelihood of that, that's generally what I'm kind of looking at. But again, as new information comes in, that could change, and we could, get something differently playing out. But for now, that's kind of what I'm looking at. And so we look at it, we go, okay, well, everybody talks about what's max pain, right? Everybody always wants further down as max pain. Everybody thinks, oh, I've seen it here. Oh, this drop down here after, it doesn't, think about this, guys. It doesn't make a whole lot of sense, right? So price drops here almost 80%, right? And you say, oh no, max pain is this from here down to 12,000, right? It's like 5% more. That's not max pain. No, max pain is when everybody's expecting that and price continues to go up and they're too scared to get in and they're watching it go up. And next thing you know, it's been going for, basically 5 months here, and it's rallied off the bottom 100%, right? That's max pain. And so you get here, and so the max pain comes out again. Well, the max pain is this idea that now we drop back down toward the lows here, and we test that. That's max pain. No, people still aren't getting in here. Max pain is this thing continues to rally. That's max pain. Because what happens is when you're getting up here at about 200%, then some people start really kind of getting in. And then you get the rejection there, right? That's the max pains that keeps going up. And when they finally get in, then you're coming back down. And they get caught and they're losing money, right? Same thing here. Same thing here. That's max pain. And then they decide as it's getting down here, they're like, oh, I'm too scared to get in, right? What does price do? Again, that's wave 2. And they're like, okay, see, it was going to go down further. I just, got screwed there. And it's wave 3 going back out, turns back around. So then they finally get back down here and they're like, oh, we're all the way back down here. This is a huge pullback, right? We've come down so far from where we were. Now we need to go down further. And then they get caught again. This is max pain, guys. It's not this going down just a little bit further. Or from right here, finally pulling back here. That's emotional thinking. That's okay. I didn't get it here, and I've been bearish, and I've been very bearish vocally on social media here, and I have to get it right. It has to turn back so I can say, look, I was right. I was just a little bit early, and it continues going up. That's max pain, right? That's what max pain is, because you're not letting go of that emotional idea. You're not getting in on the trend. And you're seeing it moving without you. That's max pain. Again, same thing right in here, right? Max pain, for here isn't that it keeps going up, right? It's this idea that it pulls back and people are waiting for it to go up higher and it's pulling back and they're scared to get out of their positions. They're scared to go short. And so it continues down without them. That's max pain, right? It's not after this rally here, even from the COVID low here with the BitMEX engine and everything, liquidation engine. It isn't the fact that we're up now at 1,600, 18%, right? And it's going to go up to 1,800% from there, right? That's not max pain, as it continues to go up there, right? Max pain is going to be this idea that it doesn't go up there, but everybody's euphoric. Everybody's jumping in and it goes back against them and they're waiting, right? Or they get liquidated as it continues to go down and they keep getting in on these dips without understanding where they need to get out, where they need to be, where the rally is going when it's coming back against them is going to make their position of what they're thinking incorrect, right? And it continues going down. They keep trying to long it without any real understanding of where they need to put that stop loss in or levels that they need to get through or profit that they need to take along the way. That's max pain. So it's just the opposite over here, right? That's all it is. That's what max pain is, guys. Okay? Let me see here. Let me see. Brian saying the legal quagmire. Oh, look at him. You get 5 cents for that word, man. The legal quagmire of crypto reminds me of Google suing Microsoft. Microsoft made Google a competitor by putting the Google browser on Windows. The legal uncertainty hinders crypto from being a competitor. Yeah, again, it's not that it has to be what you want to hear. It just has to be regulation. So you have something tangible that you can put into your understanding. So when you create crypto products or do things with crypto, you at least have a framework to work in. That's what you're looking for, right? Let me see here. Hank says accumulation is not free. Traders don't make the waves; they just ride them. There you go. That's right. That's right. So, hey, Mark, have a great day, buddy. So, anyways, that's what we're kind of looking at. Let's jump ahead and look some more charts here, guys. DXY. What do we got? We still got this chart looking here, right? And so, from a big, the macro trend kind of perspective, right? Why is everybody getting excited over this? What is this? Like is it even a couple of percent rally here? It got totally up there. It got up to 1.43%. Why is everybody, oh my God, DXY is turning now. It's 1.43%. You haven't even got above any resistance. You're still below the weekly pivot. As long as you're still below that weekly pivot, your bigger picture should be we're heading lower, right? A better idea is as long as you're kind of below this swing high up here, about a 105.5, 106. If you're below that, your position should default be down. It should be that price is going to go lower, right? Or the DXY is going to ride lower. Now, if you break out above that, it doesn't mean that it all of a sudden that the bottom's in, but then it means, okay, now you can start entertaining some ideas of a larger correction happening. When you're getting up here beyond the 78.6, which is 100, right around 112, when you're getting above that, then at that point you can start going, okay, well, maybe that bottom is actually in there. But the fact that we've had such a huge move and we're stuck here below the pivot, right at this support, I mean, we're so close to that support. Just breaking down below it opens us up to the move down to that, that 93 and some change area there. So, again, but people are very, very emotional when they're trading, right? And that's why, that's why we're able to trade against, what's going on here, guys. That's what makes forecasting possible, is this understanding of human emotion and what's going into here. The way the price moves is not random, guys. It's not random. It's not efficient. Okay. You have to get that stuff out of your mind. These were big ideas decades ago that everybody's like, oh yeah, a random walk down Wall Street, the efficiency idea, right? All that's nonsense. It's all about human emotion in the aggregate. And what you're seeing on the chart, you have that social mood, that emotion. That's what puts it on the chart, guys. That's what makes this. It's not that you see what's on the chart here and you say, okay, well, that's going to cause people to do something, right? The ones that have the money to do things, right? We're not talking about the retail trader. You and even I or anybody else, we don't have enough money to push around the market. So, what's going on there is derived. It's a derivative. The price action on the chart is a derivative. It's a visual representation of that social mood, that emotion that's going on in the aggregate. Okay? That's what that is. So that happens there. The mood happens, which produces how people buy and sell, right? In general. Now, you can have some retail traders that buy or sell emotionally based on what's going on in the chart, but they're just liquidity. Anybody that trades order flow, footprints, stuff like that, they're going to call you, your retail. You are liquidity. You are what the bigger players use. Your emotion, your non-understanding of what's going on, your lack of risk management, that's what's used. They exploit that so that they can make the moves that they want to move. Does that make sense, guys? So yeah. So that's what we're kind of looking at there. Again, I'm not saying this big head and shoulders thing is going to play out. You guys know I hate head and shoulders and cup and handle patterns. They're too easy to screw up. But if it were to play out, if you thought it is, then if you think this is head and shoulders here, then the breakdown, you're looking for an impulsive breakdown. You're looking for a big candle spread on the breakdown, okay? And that gives you a target based on the height of kind of around this 88.5, 89 area. That would be the pattern target based on that. Me personally, I tend to look at something more along the lines of a movement down to the S1 pivot here, a rally back up. Now, it doesn't have to hit the pivot. It could actually hit closer to the 100 level. And I think, if we think about it, I think that would probably be a more likely thing of what would go on there rather than come all the way up to the pivot, because the 100 level is psychological. It's a tens number. It's a zeros number. Psychologically, human beings are just funny that way. So I think it'd probably actually go there, which means we could, we could dip lower than just the S1 pivot. We could potentially get on down here toward 92 even. Something like this. 91.5, 92. And then move up there, right? So, and if we're looking at this, all of a sudden this becomes like a 1, 2, 3, 4, 5, maybe even, right? We'll have to see how it plays out. But again, as long as that weekly pivot is holding its resistance, guys, your default should be lower. Your default view. Okay? Let me see here. We got to keep on here. What else we got? I have got the NASDAQ chart. Again, guys, simple chart. Keep this simple. We've got this resistance here. We got the great breakout. Rejected the pivot. Came back, retested that resistance as support. Outside bar, huge bearish or bullish engulfing candle here. Carries us above the weekly pivot. We've pulled back kind of where we are here with resistance, right? Again, if we look at right here where we pulled back, look at all this right here. So basically, you hit resistance, right? Which is the same resistance, the same support, the same resistance, split here, same support here, right? We hit it, we broke down here, and so now we're going to see if we can get that rally up higher. Now, again, with the indexes, guys, I continue to say, and it even was with Bitcoin, this mid-August swing high is the key level. Right now, again, I think the easiest way to count this is an ABC, right? It's 5 down, up, and then 5 down, okay? That's a really short 5 down there. So if you break up from here, the odds are much more likely here that this is an ABC, which would be corrective. Now, again, that doesn't mean you can't have a triangle and this thing stretches out for a year. So you go A, and then ABC up for B, and then C, and then D, and then E, and then we break up. Doesn't mean you can't have a flat. ABC down, ABC up toward the swing high, toward the all-time high, and then 5 back down toward this low. That's a flat. ABC down, ABC up, and then 5 waves down here. Okay? And that could take, again, the rest of the year as well. So, I mean, these things could still happen. But nonetheless, with either one of them, no matter what you're doing, or if this is 3 down and it's done here, if you're breaking above here, that increases the odds significantly. That's what's going on, that it's a 3-wave corrective move. And it leaves those few options. But all those options, whether it rallies up here and back down or it goes sideways, make it a triangle, they all ultimately lead to a new all-time high. And it's the same across all the different, the indexes, right? The NASDAQ, the Dow, the S&P, all of them, right? So that's the same level. Again, that is the same level. Let me get back over here. That's the same August swing high, right? Remember, when we were down here, I said, listen, we need a breakout above this. Because if you're reading this down as structurally, right, you got a low, you got a low, you got a high, lower low, lower high, lower low, lower high, lower low, lower high. And then this is potentially the next lower low if you break out above that last lower high. And once you do that, which we did, as you can see here on volume, large candle spread, large volume, that says that this bearish market structure here, which is the higher lows and the lower lows and the lower highs, is broken. So again, this becomes that level, whether it's here on Bitcoin or whether it is wherever we just were there. I lost my chart. Oh, NASDAQ. Or we're at these stock indexes. Okay. So it's tough. It's tough being a bear in a bull market, right? Now we say, okay, well, what's a bull market? I had this discussion with somebody who, guys, do me a favor. Be honest with yourself. If you are not well versed in financial markets and terminology used, be honest with yourself. Don't go acting like a smartass online. Okay. Because when you look at things, you go, okay, well, this is just, for instance, go back to the BLX here, right? And you say, oh, this is just a bear market rally. Well, definitionally, no, it's not, right? A bull market is considered a move of 20% or higher off an extended move down, right? A bear market over a course of at least 2 months. Again, we are 100% rally off the lows over the course of 5 months. This is a bull market. This is considered a bull market. Now, people, especially newer traders, tend to consider it a bull market when you break out over here. That's nonsense. This is the bear market. This, having gone 5 months and 100%, is a bull market. That doesn't mean you can't get another bear market and go down lower and break new lows. But if we're looking at terminology and how you look at what's going on here, this is a bull market rally, not a bear market rally. A bear market rally should have been done less than 2 months and less than 20%. Okay? So let's make sure we understand that. It's not this idea that we break out the new all-time highs that makes it a bull market. Though inadvertently, many, of course, younger or newer traders tend to think that. So let me see here. Let me take a look at this, guys. So what charts we got here? So we've got that. So I'm looking, again, we're above that weekly pivot. As long as we're above that, by default, my view is higher. Okay? It doesn't mean breaking down below. It means we have to come down here and make new lows. But it does mean if we are breaking down below it, we need to kind of take a look at it and go, okay, what's really happening? But by default, weekly time frame, we've broken out above this as a good move. So as long as we're above it, we should be thinking ultimately higher. Okay? Higher here. MicroStrategy. I drew this a while back. So when was this? I drew this over here, probably back here, beginning of March. And so, again, the idea is that we rally up through into the R1 pivot area. We've got this resistance right here, right? This is just a quick draw, something I'm maybe looking at. Something like that, right? Now, that doesn't have to be like that. It could be different. But if I look at this, if I'm looking at this, I think it's like a 1-2 right here now, right? And so that gives us 2, right? It gives us 1, 2, 3, 4, 5, 5 up to the R1 pivot. But we have this 1, 2 as well, right? And this 1, 2 says 2 up here. It says a wave 5 up here around 563. So again, just generally, just a real quick draw on here and knowing what we know about pivots, we should be looking for this rally up to R1 pivot or potentially even 563, this area up here. 434 to 563. Just a quick target, big time frame. And as this plays out more, you can, refine your targets there. But as long as we're above this pivot, that's initially where I'm looking. And of course, again, like I said, we can refine this as we get up there. Let me see. Yeah, see, because you get this, I don't know. If you were to zoom in, maybe this is a 1, 2, and then this is a 3, 4. And then that would give us a 5 right there at the R1 pivot, which again is the idea that this is 1, 2, 3, 4, 5, it's same area. But again, the idea would be you hit that and you pull back toward the pivot area and then you kind of continue up higher, okay? So let me see here. Gold chart, guys, nothing's really changed on that. Again, really is high, all-time high over here, slightly lower high again. Right there at the R1 pivot. I think we're probably, I think we could maybe look at this like a 1, 2, 3, 4, and a 5, or at least an ending diagonal kind of playing out here. Or, a leading, it would be an ending diagonal here for wave 5, right? The idea is that maybe somewhere in this, around this all-time high area, we get this pullback. But if we zoom in closer, there is a chance that we could see some overextension on here, which gets us above 2100. So my thought is if we break out, instead of coming back down here, toward this 1874, 1875 level, if instead from here we kind of rally and break out higher, initially I've got like this 2100, 2130 kind of target area initially off that. And so that'll get us a new all-time high. You have high over here at $20,000 or $2,089.20 here. And again, these are the, as you can see here, guys, it's the futures contracts, okay? So, if we don't get this full-on pushback on rejection here, then I believe that wave 1 is still in progress. And, we could see at least up to that area. And then I'll look at it and say, okay, is it, how do we have to adjust the count in that now? Let me see here. Here's one of the altcoins I'm watching here, guys. Pyre, USDT. Look at this weekly. We've got this great potential accumulation range going on here, okay? And this accumulation range has been going on here basically since June of last year. Again, same low area, right, to now. You can see these big moves, right, with these big volume, big candle drop here. But look what happens right after that. All of a sudden, volume drops off less than half, and nothing really happens. You get a very, very slight lower low. So you have this low over here at, let's see here. You have your initial low over here at $2.63. And then you have your first attempt at that low here at $2.61. So 2 cents lower, but the volume is larger than the volume over here on that low. So because that volume's lower on that or higher on that spring, even though overall it's low volume, you should expect a test. And we did get a test. And that test, you want to have volume a lot lower than your spring. And we do. Successful test. And that test, by the way, gave you a low of 264. So it did, it was a higher low than the spring, which is what we look for. Volume was significantly lower. That's what we look for. And then we got this nice, the kind of almost a hammer candle there. And you got this huge kind of, get this out of the way here. Then you've got that nice large bullish engulfing candle right here, right? Outside bar taking up, which carries you up into the area of resistance up here. Rejected comes down into the area of support. Rejected, again, big, huge bullish engulfing. Rejection comes back. So you're getting these higher lows as you're also getting higher highs. So your trend is up off this spring over here in November. Okay. This is also a bullish SFP. The fact that you get this wick down below the swing low over here, and that period of time is pretty significant here. It's 147 days, right? That's a bullish SFP. You should expect price to rally up toward at least the top of the range. So here we go, trying to get up there, right? So my thought is this looks like accumulation here with the volume profile and with the what's going on here with the price action. So what am I looking for? I'm looking for what we call a jump across the creek in this area here. What that is going to be, it will have to be a large candle spread. It doesn't have to quite be this large, but a large candle spread and a large spike of volume, because what you're looking for is the breakout through the supply, through the resistance. And I've got one of two ideas here, or I've got two different ideas here. Either we rally up into the pivot, pull back to the range, and then break out, or we rally up toward the R1 at least, pull back then down toward this, what becomes this demand EQ right here around 958, 960, 950, right around there. And then we take off. In either case, I'm looking for this impulsive breakout here to set us up for one of those two moves. So that's where I'm kind of at with that. So I like that one. Bamboo says the all-time high of Pyre was almost $45. All right. So it's got a long way we can potentially go here, right? Actually on this is Binance here. The all-time high was actually 49. Oh, it's $50 right here, right on this first candle on Binance. But you can see that you had a decline of almost 95% by the time we got this low here. Again, over the course of here on Binance anyway. It's over the course of about 217 days, somewhere right around there. So almost a year. Well, not almost a year. 2/3 of a year, basically, kind of coming down there. Huge decline there. I mean, why are you? And look how long this is. Why are you not trying to long that, right, on a breakout at least? This is a lot of accumulation. So if we get that breakout, we should definitely be looking for it to rally much higher on that there, okay? Hank says Pyre is one of his biggest holdings, no derivative market. So yeah. Let me see here. What else we got? What do I think about? Oh, wait, look at Riot here real quick. Riot's still looking good, guys. So we've been talking about this for, a month plus here, looking for the breakout. We got the breakout on large volume, large spike of volume, large candle spread, breakout there. We had this range. We kind of broke out of that. Rallied up into the pivot, pulled back to it. Now we broke out above the pivot on even larger volume, another large candle spread through it. Again, looking for an initial target. Just a quick target is this R1 pivot area. This, 17.5, 18.5, $19 kind of area, just as an initial target. It doesn't mean we can't go up higher, but I don't have to go in there and count anything. I don't have to look at it because I understand pivots, right? Because I understand how pivots work. I mean, we should generally at least be looking at here. And I'll tell you what, if we don't get held here at $20, $22, there's no reason to think we won't rally up here to, $33, $38 before it even really starts even thinking about pulling back. And so again, if you think about things like Riot and Coin and Hut 8 and, Mara and all these Bitcoin derivative, basically, stocks, right? They're Bitcoin, their health is first off determined by Bitcoin, right? If Bitcoin's price rally, they should rally. So, if you see them rallying, generally you should expect Bitcoin to rally up with them, right? Does that make sense? So, again, that's what we're kind of looking at there. Ethereum. Again, we got Ethereum BTC here. We've been looking at that. We had this, again, we had a local bullish SFP here. So we had the swing low on this, what's this called here? A doji candle on the week of March 20th. And then we dipped down just slightly below that here on the week of April 10th. And then this big, huge, you got a little spike of volume there. Nice large candle breaking out above the pivot, running into this resistance right here, right? Again, if you want to pull this sideways, you can see where this resistance is. Kind of this idea right here, right? Now this rejection, support, resistance. It's not going to be exact, but it's around that area, right? That's what we're looking for. And so, yeah, it makes sense that we're getting rejected at the moment right here, right? What are we looking for? Ultimately, guys, we're looking for a breakout above this wave X triangle resistance there, wave E of wave X. That is 0.073544. If we can break out above that, then, if this count's correct, that should indicate we're going up in wave 3. And wave 3's got a minimum expected target up here of 0.120893. And this is, of course, on Binance. It is the weekly Ethereum Bitcoin chart here. But again, when we talk about ranges and we talk about reaccumulation, right, this looks significantly like reaccumulation. So you have your big sell-off at first on the weekly here, right, which takes it down. You get up. The market's not following through, and your larger players don't have to sell a lot to push it back down toward the lows of the range, right? The market's kind of saying, well, yeah, I think we're done here, right? But look what happens when you break back down toward the spring area. Look at how that volume pops up here at this low here, right? And then boom, back up, right? And then you test it, you pull back on much lower volume, successful test, and then boom, right back up. What we were talking about before on the Pyre chart, just showing the same thing here on the Ethereum Bitcoin chart, right? And so, again, you've got the bigger players coming in heavy here. These kind of volume, this is not retail, guys. You can't do this. There's not enough of you coming in at the same time calling Joe and John and Mary and whoever else and saying, hey, let's all buy around this level. You get these big volume footprints at the extremes because that is where the bigger players are playing. Again, you didn't even have to get it up here. You had such a strong rally. Look at this. It's such a big rally up and through here, right? That it was finally, you can see how the volume kind of coming in here, right? And it's dying off as you're getting higher and higher, right? People are losing more and more interest as it's getting up there, right? But you still have this spike that sends it down here, but then look at how volume drops off. And so even on this, this reactionary rally up toward the highs that makes that new high, there's little that has to be done up there to send price back down. The market is not really interested in buying any higher. So when it gets down here, so the price falls down and you have your big players now trying to buy at the bottom of the range. Large volume uptick here in this area. Notice it isn't the one candle at the low, guys. Notice, look where the volume starts peaking here. It gets sent here, right? This is the bigger players trying to get it to push down below here so they can get lower here. And what happens? Volume continues to stay elevated compared to where it was, right? And then it gets down here and you get this huge volume pickup down at the bottom. But look what happens all through this area. Volume continues to stay elevated. They're still buying it. They're not buying just at the swing low, guys. So if you're a trader and you're thinking, man, I need to sell or short the absolute highest price and buy or long, right, the absolute lowest price, it's a fool's errand. You're rarely ever going to get it right, guys. You might get close to it sometimes if you're lucky. You're much better to identify where these ranges are happening and just buy or sell in those ranges. Because I'm going to tell you right now, you don't have enough to sit here and buy all this as it continues to go up here. You got to find a smart area to buy. You don't have enough to continue selling all the way through here. You just got to find a smart area to sell, right? If you continue holding out for the event, right? The highest price, the lowest price, these are events. They're not the top and the bottom. The top is a range, okay? The bottom is a range. These are just events. They're one-time events. Price hits that price and it's done. Stop trying to stake your trading career on events. You're going to lose a heck of a lot of money doing that, okay? I don't know how much better, man. I'm telling you guys, if you don't understand what kind of gold that information is right there, then you're not paying attention. And that's on you. All I can do is tell you these things. It's up for you to actually listen and think about what I'm saying, okay? So again, Ethereum looking good there. We did get the breakout here. Remember, we were talking about this line. It's got to move there. Let me pull it back here. Remember, we were looking for the breakout above this resistance line here. And we got that. And now we're pulling back a little bit, but we are above that. So we're going to see if we can't continue this up higher now. But that was the first thing we're looking at. We still have a lot of room here on the weekly Stochh RSI as well. So let's see if we can get a hold in this area and a rally up higher and get above that wave X there. Locally, I would then be looking at the range in this wick up here, this supply. And so probably closer toward the EQ. So locally, probably around 0.0833 area, or a little bit prior to that is where I would be looking if we can get this continuation up. A rejection at least in that area, if not this higher area up here. So if we continue going through that area, I would be willing to look up at closer toward maybe 0.8688 kind of area as a target. It's all local though. Again, the idea is either we get rejected there and pull back and then go up, or we break out above that, pull back toward it, and then we continue up. But either way, again, if you're looking for a longer term play and you're looking for a breakout there, your wave 3 target is up there around 0.120893 on that. Okay. Bashan, what's up? Checking in from Slovenia. Love seeing you check in, man. Let me see here. Man, you guys are killing me. You guys, all these charts here, right? I've only got a few more minutes here. Let me see what I can do. Let me look at what I want to look at here and see if I've got time to do that. Okay. Again, Litecoin back here above 100 again. As you can see here, broke out, pulled back to the hourly pivot, tested it, broke out higher, rallying up toward that daily R1 pivot, get some resistance there. But ultimately, kind of making itself higher there. Let's kind of bring this into the daily. There we get a better picture, guys. Look what we're doing. Are you long and strong Litecoin yet? Again, guys, I have been talking about Litecoin since we were back here. What was it, November or October in Twitter? You guys can find that tweet in there. I think we were talking right around this $40, $50 area, about 100 plus. And so we've already done that, obviously. And then we pulled back here. People got another chance. I mean, all we did, guys, look left. Clean chart. You don't have to have all this other stuff on there, right? Look at what you did. All we did was pull back to this previous area of support and resistance. See this right here? That's this area right here. All we did was pull back there. Boom, pop up, go, go, go. And we've just been going, right? We created resistance right here with this range. Broke out above it, came back, retested as support. Hit the range resistance, pulled back toward the support level here. Boom, breakout. There's the breakout. There's the breakout. There's the breakout, right? I mean, you can look at everything else alone. You can go, okay, well, everything else aside, what is the height here, right? You can look here and just go, okay, well, what's this height? And you can look up here around 142 as a quick, easy target. Or even up here at 170. By the way, 170, 150 is my wave 3 target right there. Okay? So, yeah. Still looking good on there. Doge, I told you guys, don't sleep on Doge here. Again, we had the big breakout. We had the big breakout again. And some nice movement here. Look at what we're doing here. All we've done is pull back again to that previous area of support. You've got the high volume nodes. We are above the high volume node. We are above the daily pivot. Yes, I'm talking quickly. I'm trying to get this done, and I'm excitable sometimes. But anyway, yeah. So, again, pull up here, created this range, which was right under the resistance, the previous resistance here, right? You can see this all the way back over here, support resistance. And so we pulled back to it. Boom, here we go again. Looking for a breakout here higher. I mean, I'm looking for it to go at least 18 cents right now. This is just a local target. This is not like, oh, this is my ultimate target. That's just a local target, guys. Here's the bigger picture. You can see that up there, they get you right above that weekly R1 pivot right there, right? You can look here and you can assume this is a leading diagonal, maybe an expanding broadening wedge, right? Or an ascending broadening wedge. And you can go maybe ABC 1, 2, ABC 3, 4, ABC 5, or even, again, I'm not zoomed in and counted, but you could have 5 up here, right? But overall, you're overlapping. But then again, I can't see where the swing low is here. It's possible this is a 1, 2, 3, 4, and then this candle by itself, this weekly candle, this reversal hammer type candle right here is 5, right? That's actually probably what we're doing here, I think. Yeah, it looks like maybe this is a like a 1, 2, and then a 3, and a 4, and a 5. And then we've got, I wasn't planning on counting this. This could be an A with an A, B, C, D, E as a triangle here. Let me kind of throw this in there for you. Um, A, B, C, D, E, right? Like that. And so I get you a triangle then. And again, I haven't gone any deep count on this, guys. So do your research here. Make sure I'm correct on this, right? But this does look like we've potentially got a one up here, two down here. Try that again. Come on, there we go. Let's actually change this like this. Okay. And so again, you have then your A, your B, your C here. There we go. And then basically, again, you have your 1 and your 2. And so if this count is correct, then breaking out here, which we did with this wick, we should be heading up for wave 3. Okay. So I'm not guaranteeing this is 1, 2 here as I've got it. But if it is correct, because I just did this real quick here. But if it is correct, right, then you would be looking minimum expected wave 3 up here around 24 cents or so, minimum expected. And it gets you right here, guys. It gets you right here at this resistance. Makes a lot of sense. Resistance support, right? I'm sorry. 24 right here. Yeah, so just right in this resistance support level area right there. And then wave 5 gets you to that upper resistance support area. And wave 1 would pull you back to the R1 pivot. Again, your wave 4 target has confluence with the pivots. Makes a lot of sense. Your wave 5 target has confluence with the R2 pivot. Now, that does not mean you can't extend, right? Wave 3 could end up at the R2 or even up here at the 2618 or even the 3618 as you're going up, right? But once again, we've broken out of this long-term decline here, right? On that candle, large candle spread, large spike of volume comparatively. That's 539 days of downtrend before we broke out, right? Came back and retested it as support, consolidated above the previous area of resistance here, right? And now we're looking to break out through that consolidation and head up higher. So, again, we're here. If we look at the chart here, if we look at the volume print here, right? All that volume is below us. It's working as support here. And we're just now getting through the top of that volume. So, when you get to the pivot, we've already been rejected there once in this low volume node. So the likelihood is that we would pop up through it at least to the next high volume node, if not to the next low volume node where we get rejected. Again, why would we either get rejected right there in the low volume node or why would we rally through it? Because it's a low volume node. The market is not buying or selling in there. So if you're a bigger player trying to buy, well, you don't want to try and buy in the low volume node because you're just going to suck price right through it. So that's the second part of it. If it doesn't just get rejected there, then it should work like a magnet up through the high volume node where you have liquidity. Now, again, as a big player, you generally don't want to be buying in those low volume nodes because there's no liquidity there for you. The market's showing you, again, this is multi-years here, right? The market's showing you we're just not interested in that area, right? So I think there's a lot of potential upside there for the dog coin here. Doge, the original dog coin, I guess you could say, right? But yeah, looks good overall. Doesn't mean you can't have pullbacks along the way, but we're talking on the weekly time frame here, guys, okay? What's my ultimate target for Doge on the high time frame? So I don't often give like new all-time high targets. Sometimes I might work with them depending on what the counts are. I don't actually have a count. As you saw in here, I just kind of threw this together real quick. But if this bottom is in, ultimately we should at least get up here toward points, is almost 64 cents, right? If we go based on the height of this, which sometimes I'll take a target off that. And that would give me then, I can do this for you. If I was just to take the size of this here, based on this, the targets would be $3.91 and $10.97. Now, I step back here and go, well, I don't know that I necessarily think it's going to get up there. This is where you go, okay, well, I don't know that makes a lot of sense, right? Um, but I think minimally, I don't think $1.39.5 is really out of the realm of possibility. So that would be where I'd be looking minimally on a breakout. It's the 123.6. Because basically you could look at this as a 1, 2, 3, 4 and get you a 5. And so generally your 5 will be the 123.6 to the 161.8. But with that 161.8 being almost $4, I'm not saying it definitely can't get there, but man, I don't know. I think that's right now that's out of my realm of, yeah, that's likely to happen. I would look closer to the 123.6, which is maybe $1.39, $1.34, $1.40. To me, that's a more manageable likely target with expectations right now if it were to break out. Does that make sense? So yeah. Again, I'm not saying that it can't definitely go to 391 or. I mean, I have a hard time with $11 just with what it is there. I don't know really what would have to go on to make that happen. But I could see potentially $1.39, $1.40 around that area. So we'll go with that. Wait, $1 Doge, that would have socials going bananas. Yeah, right. Well, I mean, remember what happened last time we were here, right? You had that really cringe TikTok financial stuff going on. Oh, here's my case for why Doge is going to go to $10, $100, and even $1,000. I went, oh my God. I think I even commented on it on Twitter. You guys got to be careful with that kind of stuff. It's kind of like somebody says, okay, well, listen, if you get into trading and all you have to do is 1% a day and you're going to get this much. Well, yeah, but the reality of trading is not every day is a decently tradable day. It's not a day worth trading. And even with that, you're still going to get losses along the way. So the odds of you actually making 1% every day, even though it's a low percentage, is really astronomically high. The odds of you actually getting it done, right? Or it's really low. The odds of you not getting it done is astronomically high, right? And so I kind of see the same thing when somebody jumps out there with the Doge chart and says, oh, well, here's my case for $100 or even $1,000. Again, it's that same kind of mindset. Sure. But I think if you think in terms of the 1% a day thing, I think the best thing you can get out of something like that is the understanding that as a trader or investor, it's all about time and compounding. So as a trader, it's all about you can just make small profits. You don't have to hit home runs all the time, right? Make small profits consistently, because every time you make that small profit, your next position size, if you're using proper risk management, is going to go up. And it gives you the chance to make more profits, and to go up, make you a chance to make more profits, right? Time and compounding, besides risk management, I guess it's actually part of risk management, right? But the time and compounding is your other secret sauce, guys. Does that make sense? All right. So, there we go. We got that. Okay. Man, oh man, I don't think I've got to get out of here. We're already running really late here. Let me see what I got as far as, let me do this. Let me make a copy here. Whoops. We'll look at Doge here, or Link here real quick, since that's been asked a few times. Okay. And then I've got to get out of here. Link, look at the big time frame, and we'll see what we can see here with this. Diego, buddy, have a great day, man. We'll see you over in Discord. Let's see, Link, USD. Throw that on there. All right. This is the accumulation I was talking about. Again, guys, look left, zoom out, okay? Look at what we've got here. What's going on exactly? This is what's going on. If you can't see it, let me make it thicker here for you. I don't know how much thicker I can make it. I think just maybe 2. Yeah, there we go. Hopefully you can see that really well there. This is what's going on. You had this top that formed back here in 2020, right? 2019 to 20, break out of there. We came back and tested that, right? So, again, if you're a price action trader, you might say fair value gap. It's filled in now, okay. Of course, you've got fair value gap down here as well. So you got to be careful of that type of stuff. But nonetheless, all you did was pull back support. Now look what happened. You're doing that right here, just prior to that small volume, that low volume node. Remember what I told you earlier about that? I explained it, right? So this is your range, guys. You are ranging now. Basically, let me see here. 308 days. Getting close to a year, right? Your range is going to be this swing low here in June, right? Up here. This is your range, okay? You got preliminary support right here, large volume, large candles or large wick at the bottom. It usually denotes the top of the breakout area after the top of the range. It usually contains the rest of the price movement when it breaks out through the top of the range, right? So you get your selling climax. Again, in this case, you have large volume. You have a large lower wick. There you go. You rally up. There's your automatic rally into resistance. You pull back your secondary test. Rally up here. Pull back. Rally back up. You're coming down. And so we get down to the low here, and you have a low at $5.38.5. You have a low over here at $5.28.5. And so you're getting an LPS, a last point of support, not even a spring, right? You're doing so. That low matches that low, right? Look at how much lower this volume is over here compared to this volume over here. Like a quarter, if that, 20% maybe of that volume. That's what you want to see. That tells you nobody's selling at the bottom. Nobody's selling into the bottom. Your big players are not trying to push it down. The market's not trying to push it down. Boom. Rally up, hit resistance, pull back. So you get your show of strength. Your last point of support, we're rallying up here. I'm looking for a big candle in this area. Large candle spread, large volume type thing to break out to give us our jump across the creek. The creek is the supply here. And so again, without counting waves or whatever, initially my thought would be, okay, we're either going to do this. We're either going to do this, into this, into this, or we'll blow through it, potentially get here, come back here, and then head up higher. Those are my initial two ideas of what I would expect here just based on what we're looking at here. Now, if you don't know anything about Wyckoff, join us. Tier 3, man. Join us with Tier 3. Get in there. We do a Wyckoff stream every week. We do an Elliott Weave stream every week. We do a price action concept stream every week for Tier 3 members, and on top of everything else we do, right? So you can go to howtotradetowin.com and just go to the shop at the top there and the products. Just go to Tier 3. Jump on that. We give a huge discount if you sign up for a year because my thoughts about trading are, if you're serious about trading, you're not going to learn, you understand, you're not going to learn it overnight. It takes practice. Again, it takes focus, discipline, consistency. You're not going to get that, guys, unless you're actually doing it, right? And so anybody that's just trying to sell you on hey, just join us for a month and that's all you'll need is a bunch of nonsense. They're going to leave you out dry and hanging, right? And so what we do is we discount it heavily if you decide that you want to, put in the real effort, the real time in there. So jump on there and do it. We'd love to have you there, guys. I've got to get out of here, okay? Please hit the like, follow us, subscribe to the channel, leave a comment. I don't get a whole lot of comments. I'd love to see more comments on there other than the spam bots. That would be great. I usually try and respond with that. But I hope that you guys have, just an amazing week, okay? If GMX, yeah, Big Fape, let me know coming in next time, and I'll make sure to do that on Friday, okay? I apologize we didn't have enough time here. I had some charts I definitely wanted to go through because they're more indicative of the overall structure of the expanding bear market, right? Again, as I said here at the beginning, it's hard to be a bear in a bull market, and we are in a bull market, guys, in general in crypto, okay? Bitcoin is showing that. Anybody arguing the other way, really, again, guys, it's just a lack of understanding. They're trying to fit definitions for their emotional kind of whatever they're dealing with right now, okay? Doesn't mean they're terrible people. It just means that they're having a tough time, getting through that. And we all kind of go through that, okay? So that's where we're at. As always, remember, the only thing you control in the market is how much you lose. That's it. So I really hope that you guys work really hard on that more than anything else, more than any system, more than any way of understanding how price action works. The biggest thing you can do for yourself to become a better trader, to help you, is to learn proper risk management. Do that first and then do the rest of it. Because if you do that first, at least it'll help make sure that you've got a chance to get through that curve that when you first start, right? Because when you first start, you start here, and then you kind of go down, and then you start coming up as you learn, and you start getting profitable. You have to, that dip at the beginning, you have to be able to withstand that, and you're not going to do it if you're not using proper risk management, okay? All right, guys, you've been great. Really appreciate y'all. Like I said, you can join us at howtotradetowin.com. We'd love to have you there. Follow me on Twitter, TX West Capital, Texas West Capital, pretty much everywhere else, YouTube, Instagram, Facebook, all that kind of stuff. And I'd love to have you guys talking with me. Is there anything else? Is that it? I think that's it, right? All right, guys. Well, in that case, I hope that you have an amazing week. Make sure you get your taxes done if you're in the U.S. today. And we'll see y'all on Friday or hopefully over there in Discord. Take care.